Operating at an extraordinary level can seem challenging. Learn how to survive in the lone wolf economy in the OG Money podcast with Lonnie Ogulnick. Drawing on over 20 years of experience in the trenches of Wall Street, Lonnie explores what it takes to be successful in today's rapidly changing environment. From daily routines, wealth strategies, and sustaining the highest levels of wisdom, Lonnie and his guests unpack proven ways to live an extraordinary life.
Okay, welcome to the OG Money podcast. Today we have a special guest, an OG from Staten Island, Michael Liebowitz. Welcome, Michael.
Thank you, Lonnie.
I wanted to get you onto the podcast really early because I thought of your story as something that, is truly, the American-made story, right? You come from humble background. So I want to start out with, where does a kid growing up in the 1980s, 1990s, Staten Island, get to owning the Mondrian Hotel in Miami? What were you like as a kid growing up in Staten Island?
I grew up in Staten Island. My father was a New York City taxi driver for 25 years. So I grew up, very humble beginnings, but my father ended up getting out of being a taxi driver. He's a very likable guy, and he ended up meeting the guy that actually was the taxi commissioner of New York by chance. The guy who took a real liking to him. He got out of that, but stayed in the taxi business, but never really was able to kind of turn that into a big business. And there was this thing called the black car industry that he was part of creating. And as a kid, it was something I always wanted to do. I always wanted to be in that business. And I was literally 14, 15 years old, having dreams of my father creating that and turning that into something, and me ultimately taking that over. So even at a very young age, I always had it in my mind of this vision of owning a big business. And that's where that started in Staten Island.
What was the neighborhood like you grew up in? Like, you think of two things when you think of Staten Island in the 80s. You think of the mob, and you think of Wu-Tang Clan in the 90s.
Yeah, it's funny you bring up the mob and the Wu-Tang Clan, because where I grew up, I lived in a semi-attached house. There were a lot of people in a very concentrated area. You'd walk outside my house and there'd be 30, 40 kids hanging around and, all of that. My father, again, I said, was a very likable guy, and he had a couple of friends in those kind of parts of the world. I became very close with one of them, who was kind of like a second father to me. This guy had a very big influence on my life. And he actually owned a bunch of businesses that he would always say to me, oh, you can come and do this, and, yada, yada, yada. I had those visions of, that kind of thing going on. And it's funny you mentioned the Wu-Tang Clan. A friend of mine that I grew up with actually ended up getting involved with them, but that was actually way past when I was in Staten Island. So when I was in Staten Island, it was very Italian. The gangster kind of thing was very big in Staten Island, and it drove a lot of things. But the guy that I was very close with always said to me that, you should be in legitimate businesses and things like that, and you should stay away from all of that. And that's where he was a very good influence in terms of guiding me and pushing me, and he gave me a very instinctual nature. And just growing up in Staten Island gave me a very instinctual nature, because, you're around all of these people, and I was, very at football games and do all things like that. And, as a kid, that's kind of what I was into. I was always into making money and how do you make money, and, business and gambling. And he used to take me to the horse track, and we would go to the track. So it was a very different upbringing than ultimately what I ended up in, which was, the financial business and the insurance business that I actually got into because I had an uncle that was in the life insurance business. And my father pushed me to go into the insurance business because it didn't take any investment. You go and you sit at a desk, and if you make money that day and you can sell insurance, it's great. And he was in the taxi business and the limousine business, where it took a huge investment before you made any money. So you could literally spend X amount of dollars and at the end of the day make nothing or lose money. Where the insurance business, he always felt it was very lean business, where you're like, from your business, you come to work, you sit at your desk, and you either make $1 or you make $10,000. So I had an uncle that was in the insurance business, and while I was in college, I worked for him part-time and learned portions of the insurance business, but I ended up learning, he was in the life insurance business. He did pretty well in it, but I knew I didn't want to go into the life insurance business because I hated talking about death. It was basically talking about scenarios of, is someone going to die and what you needed and all that. And I just didn't like that conversation. So I ended up going into the property and casualty business and not the life insurance business. Although I did go into the life insurance business somewhat, and I ended up actually owning a life insurance business, a business that I actually still own today, that I ended up in with a partner of mine that I've been partners with for almost 30 years, and who's like a mentor, who has been like a mentor to me for a long time, and is just a great guy.
Rewind just one bit. What would you say is the greatest life lesson of growing up around those type of individuals? And we watch movies like The Goodfellas, The Bronx Tale, and everybody loves a good mob movie, right? And you lived in it. So that had to have an influence on your drive to make money, just being around all of those hustlers and people trying to make it in life. Maybe they went in a different way, but your mindset was made at an early age, thinking big and businesses. So what was the one thing you think you took away from your childhood?
I mean, I think that's a really interesting question, because the one thing that those type of people had was they were really very smart people, right? But they didn't have the educational horsepower to back that up. So for me, I learned all of that, and they were very instinctual. They knew how to read people. The one key that I learned there, and I applied not knowingly to my life, all of those things that I learned, and it was about people, relationships, loyalty, which is the key thing, right? Ultimately, trust and loyalty is the most important thing in the world. And that is with respect to business, personal relationships, your significant other, right? Whether it be a spouse, a girlfriend, or whatever it may be. And it gave me the ability to try and understand how people think. They always used to say, hey, if that guy thinks that way, you don't want to have anything to do with them. So, and that applies to your girlfriend or your wife or whatever it may be. And you don't want to be around people that don't think and don't understand loyalty and honesty, right? In anything, right? You don't want a business partner that's not loyal. You don't want employees that are not loyal. And you certainly don't want your significant other not to be loyal, right? And have that honesty and that integrity. And I'm a very direct person. I believe you should be straight with people. One of the things I've always said is, you may not like what I have to say, but I'm going to give you the truth. That is really what I learned the most of. And it's a core belief for me. So like the minute I'm around someone or someone I'm in business with or in my personal life that I don't believe is a loyal, honest person, I don't want them in my life. Because and Warren Buffett has said it over and over again, it's one of the most important things you could do is picking your spouse or your girlfriend or whatever it may be and the person that you're in your life with, because if they're not loyal and they're not honest, get out. I mean, it's just, and I've had people come through my life that they appear to be that person, right? You meet people in business, you meet people in your personal life, and you think that they're honest, but ultimately everybody shows themselves. You've got to be very aware of that. So that upbringing, I think, really gave me somewhat of a sixth sense to understand that. And I think you apply that across your life. The people you're in business with and in your life with are the most important things you could do.
Yeah, I agree. So you're a kid, you go to college, right? Everybody gets, I guess, a little bit lost if they don't know exactly what they're going to do. You said that you had this uncle, you're going into insurance. Did you ever enter that funk phase, like post-college, where you're just not really sure? I went through this real divot. I got into a little depression because I was lost. I was clueless. Did you ever have that? Did you ever go through that early stage, like, I have no idea what I'm doing? And in my mind, that was the greatest thing that could have ever happened to me, was going through that experience of pain and hell, because now I know I'll never stop working in my life, right? Like that 4 to 5 months of not working and being lost was the worst period of my life. I'm glad it happened at 21. Did you ever have that experience where you actually were lost before you started on your ascent up?
I still have it, right?
Yeah.
Ultimately, I mean, I didn't have it. I had it in the sense where I had a sense of direction, where I thought the insurance business was a good place for me, but there were many times within that I said, is this really what I want to be doing? I always wanted to be a big thinker and a big picture guy. Like, if you're going to fail, I'd much rather fail big than fail small. I think throughout my career in the early stages, I said to myself, is this really what I want to do? Like when I said with the life insurance, I knew I didn't want to be talking about death. I didn't think it was a big enough. I thought most of those guys that were in that business were building practices and not businesses, right? And I always felt that I wanted to build a business and have employees. And the uncle that I had that was in the life insurance business was a practice guy. He had a practice. And then I was dating at the time, who was ultimately my wife, now my ex-wife, but I was basically working at Cigna. That was my first job out of college. And it was in the financial services part of that business. Her father knew this guy who ultimately became a very close relationship of mine. And he said, you should just meet this guy. It'd be interesting. And I met him, and I had a bunch of job offers actually to leave Cigna at that point. And he was a very interesting guy, and he's a much more successful guy today than he was then. He was already somewhat successful then, but not to the level there. And I met with him, and he gave me, I remember when I walked into his office, there were like 100 people there. And he was in the life insurance and pension business. And I couldn't believe that someone in that business could have this many employees. I didn't understand what they all did, because I saw the other side of that business where it was a practice where a guy had 3 or 4 people. And I knew the minute I walked into that office that's what I wanted my business to ultimately look like. And he had said to me, listen, I'm not going to pay you. I'll give you a desk and a phone, and maybe, you could figure something out here. I had job offers for real money to, get a salary. When I say real money, I just mean a salary. It wasn't big money, but it was a starting salary that were decent. I had no money at the time, right? My parents didn't have a lot of money, but I just saw something there that made sense to me. And I always wanted to be entrepreneurial. I never wanted to work for anybody. And this was kind of an opportunity for me to kind of start my own thing, be entrepreneurial, and be around people that I thought were really smart and knew how to do it. And again, it goes back to, I always understood, even at a young age, that you got to be around the right people, that you've got to find people with integrity, that are smart, that are workers. So I learned a lot of skills and a lot of, I always had incredible work ethic. Even my dad was, even though he was, a pretty simple guy in the sense, but he was a very hard worker, and I was also. So going there kind of gave me some sense of direction. But even when I was there, I always would have, thoughts of, is this really what I want to do? I will tell you, I had sold, I'm going to fast forward a little bit. I sold the business I ultimately built. I ended up going into the property and casualty business. And that guy who was my partner was friends with Leon Black from Apollo. And they were starting an insurance roll-up. And this guy called me and he said, hey, I'm sitting with Leon Black and they're doing an insurance roll-up. If you want to put the business in, me and him I had started a property and casualty insurance business. Me and him were 50-50 partners. He was involved in a lot of other things, so he really wasn't doing anything. It was really kind of him in name only. He'd be available if I ever needed him because he was a 24/7 guy, but he wasn't involved in the business. And he said, listen, if you want to sell it, I'll sell it. I'll do whatever you want. I had already grown the business really quickly. So we were already doing, millions of dollars a year in business. And I was 28, 29 years old at the time. And I jumped at the opportunity to do this because it was, again, I didn't know, do I really want to spend the rest of my life in the insurance business? I thought I had bigger aspirations than just that. I figured Apollo's involved in the deal. It could be great. I could make a lot of money and I could always end up being something else. So there was always a part of me in the insurance business that I had one foot out the door. So I think I've always had that. I think I have it now. Even the things I'm doing now, I say to myself, is this really what I want to be doing? So I'm always self-evaluating, what's going on in my life all the time.
And I want to get to that in a little bit. But so you walk into this place, you have an opportunity, you start grinding, right? You're cold calling, you're doing whatever you got to do.
Everything.
Right. So you're basically, starting out. Same thing with me, just starting out however I can make it. But the energy's right. You feel good. You're in a good place. What would you say your first break was, like when you actually start pivoting towards like a higher trajectory where something broke for you, where it was like, okay, this is game changing. I can't believe that just happened. It's
interesting you ask that because it's a easy one for me to answer in the sense that the guy that I mentioned to you that was the mentor, he was on the board of a tobacco company. It was called Liggett and Myers Tobacco Company that's still around today. And the company was called, the parent was called Brook Group. And the CEO was this guy, Bennett LeBeau, who was a corporate raider, tried to buy RJR Nabisco. And their D&O insurance was canceled. And they were going through a rough time. This was early 1990s, maybe 1990 or 93, maybe 94. They couldn't pay their bills. I mean, it was that bad. And I would go sit in that guy's office just to hang out. And he would let me sit there. He would just let me sit while he was on the phone, and I would just listen and learn. I would literally walk into his office, sit on the couch, do whatever I was doing, but just sit there and just like take it all in. And this guy LeBeau called him up and said, hey, I just got canceled for a D&O, and if you're running a New York Stock Exchange public company, you can't operate. And Marsh was the broker, who's the largest broker in the world, and they couldn't get it done. And the guy, his name is Howard Lorber. I'll bring up his name. He deserves the credit. And he said, hey, can you do this? And I was, I don't know, 20.
Well, how'd you know Howard Lorber at that point?
I had met him. He's the guy that I mentioned to you that the girl I was dating at the time's father was friendly with him and said, hey, you should just meet this guy.
Okay.
And I had those other opportunities, and there was something special about this guy. And I said, you know what? And the other thing about him was he wasn't afraid that I was young, right? So you would meet people throughout life, and they would look at you at 24 years old or whatever it may be, and they thought you were limited. Howard was a guy that when you were 24 or 25, to him, there was no reason why you couldn't make $10 million in a year. You know, he was like a limitless, very, very optimistic, long-term thinker, global thinker, and that's what really attracted me to potentially going into business with him. So he says to me, hey, I got Ben LeBeau on the phone. They just got canceled for their D&O. Can you do it? Now, I said, sure. I just said yes. I had nothing, whatever. So I ended up finding these guys, a company called ARC, that specialized in that. And they were what they call a wholesaler in the insurance business. And I get the guy, and I had met the guy literally a couple days before on something else. And I called him up and I tell him the story, and he said, it's done. And I go, what do you mean it's done? He goes, I'll get it done. I'll give you a call in the morning and we'll get it done. I say, yeah, but Marsh can't get it done. He says, Michael, it's going to be done. I'm not saying it's going to be cheap, but I will get you a quote in the morning. I said, okay. I ran out of the office. I went back in. I tell him the story, and he's like, unbelievable, great. Let's see what happens. Now I'm sweating the whole night thinking it's going to happen. Well, he called me in the morning, and there was a huge price, but we were able to get him the insurance. We got it, and obviously it was a big commission, which was a big part of it. But what was better about it is that Ben was a very loyal guy. After I got that, it was like I could write my own ticket. And he also had controlled Western Union at the time. And obviously that's a huge business. And I got the insurance on Western Union after that. And now I'm, I think I was 25 or 26 years old. So I write this, the troubled end of the business. And that business ended up turning itself around, and they did a lot of things with that company, and it's still around today. But I ended up also getting Western Union, and he controlled another company called Skybox, which was a trading card company. I got that one. The other thing that taught me, which is what I always knew, is these people were very loyal. So when you did something for them, that was it. I mean, you were their guy, and you became their guy. And so when you brought up, me growing up the way I grew up, it all fell in. The difference was these loyal guys had access to hundreds and hundreds of millions of dollars. And these other guys were really kind of small-time players operating in this, very primitive way. It was interesting in the sense of it. Somebody for a story for another time, but a very famous guy said to me when I met him that all it takes is one client, and which was fascinating, and it was true. So that wasn't it, and that ultimately that business isn't really what kind of wasn't really the key to all of the success that I had throughout my life, but it was very pivotal, and it was very important, and it gave me confidence. And the other thing that guy Lorber gave to me, and I actually told him that he was shocked. I said it to him last year, after being friends with him for almost 30 years. But being around him, he taught me how to win. And that's a very important thing. And what I mean by he taught me how to win was that you have to know you could do it, right? So you see all these things going around you as a young person. You see all these people making all this money, and you wonder, how did they do it? Did they inherit it? Did they get it through this, that? Did they buy a building for $1 million and got lucky and it became worth $100 million? Or did they buy a stock that went up? And knowing how to win was probably another one of the most pivotal things. And it really is a sense of knowing that you can do it. And once you know that you can do it, it really does become that much easier. I mean, there's a lot of hard work and a lot of things have to come into play, but it gives you a mindset that is very, very important. And I got that mindset being around him because he was a winner. He was always doing things, and he was a young guy when I met him. And there were a bunch of those people that, I was around, and I mentioned that guy, Ben LeBeau, who was a guy that was a fearless guy back in those days of, the guy tried to buy RJR Nabisco. And I had met a lot of those people throughout my life other than, the people I just mentioned, and they all had tremendous impacts. I also met people that I learned what not to do, that I thought were doing things that you shouldn't be doing. So I would say that I really studied people, and I was always very aware. I always sat and listened. I wanted to hear what they were saying and what they were doing, and I tried to really take away all of their good points and bad points and learn what to do and what not to do by studying people.
So financially now you're starting to move up the ladder. I know you've been involved with the private equity world, right? You sold to private equity, and then you bought back your company, and then you sold it again. Describe for the average listener right now, like the world of private equity. What is it? How does it operate? And do you think where we are today in this world with COVID-19, the banks with all their leverage, is private equity right now in a good spot because the Fed bailed them out? And is there a future in private equity the way that maybe it was for the last 20, 30 years?
Well, I mean, I think private equity, which I learned a lot about back when we did the deal with Apollo, in 1998, 1999, where I was a founder of this company called National Financial Partners. We ultimately went public in 2003. It was actually the first IPO of that year. It was after 9/11, and no one had gone public, and we went public on the NYSE, and it was we opened at 23. We closed that day at $26 a share. I had folded my insurance businesses into that company. So I learned a lot about private equity while we were a private company before we became public, and then we were pretty much away from Apollo, and Apollo was just a shareholder. But I learned much more about private equity in 2016. You mentioned that I bought and sold a company, Harbor Group, which was one of my main businesses, multiple times. I sold it, bought it back, sold it again, bought it back, sold it. But in 2015, I wanted to position that business for sale. It was, again, going back to that question, is this what I really want to do for the rest of my life, right? I was very involved in that business, and that was a business that got started out of another business, which actually was called Harbor Group also, but it was the brokerage end of that business. And it was a business I created pretty much out of an idea that I just stumbled upon doing a favor for someone. But I had met in 2015, I positioned it for sale. I ended up meeting a bunch of private equity firms. In 2016, I ended up meeting one called Stone Point Capital, which is the largest financial service dedicated private equity fund, I think, in the world. It's $25 billion, but they're totally dedicated to financial services. And I met with these guys in 2016, and I had other offers that were larger than them. They were not the biggest number. I ended up selling a minority interest to them for a couple reasons. I knew that I ultimately wanted to sell that business in its entirety, and I knew I couldn't do that and ultimately exit it personally by selling it on a direct basis. Anybody I would sell it to in that moment would ultimately want me to stay forever, or for as long as possible. And I knew I didn't want that, and I knew that would be difficult. And I met these guys, and they were private equity. The CEO was a terrific guy, Chuck Davis, who was at Goldman Sachs for a long time. The chairman was Steve Friedman, who was the CEO of Goldman Sachs. And again, it gets back to that people thing, right? So I met with them. I liked these guys a lot. They've been around the block 500 times. They weren't the type of guys that were going to be calling you every 3 months asking for the numbers and what's going on. They were very, very experienced. And they said to me, on the second hit, we'll make you a lot more money than on this first hit. And I believed what they had to say. So again, it gets back to the instinctual aspect of knowing who you're getting involved with. And sometimes you can't be greedy. That's the other thing. Even when you sell a business, leave a little bit on the table for the next guy. The people that, work every deal like it's their last deal is not a good way to approach business. And I knew with these guys that, leaving some money on the table ultimately was going to benefit me. And they were guys that I knew, and I still have, even though we ultimately sold that business, I still have a great relationship with them. I still do things with them, and they're really incredible people. So people have the vision of private equity like they're Darth Vader.
Right.
Now, there's Darth Vader in every aspect of the world, but private equity is a great place to be in. I think it's a great career path for people. When they say the Fed bailed out private equity, I'm sure there are aspects of private equity that did get bailed out by the Fed, but
I think the Fed bailed everything out in the last 3 months.
The Fed did bail everything out. There's no question. But I think we're in a pandemic, which is a little different than we've ever been in before. Right. And when you shut down the entire country, you can't listen, I own as you mentioned, I own a hotel. and we were forced to close.
Yeah.
Okay. So they basically said, hey, you have to close your doors. At the end of the day, the government can't come in and force the closure of businesses without providing a level of backstop to the economy, or you will have nothing left, right? There's the credit aspects, there's the psychological aspects, there's all of it. So ultimately, this is an unusual time, and I think that's a larger conversation. But with respect to your question about private equity, I think private equity is a great place to invest. I think they're really smart. I think they've got a lot of dry powder. I think they're always there to take advantage of opportunities. But again, you've got to go with the good private equity, and I'm a public investor in Blackstone and KKR and Apollo. I think those stocks are great. I think that, they don't trade that well in the market, but they pay great dividends. I think they are always going to be opportunistic, and I like them long term. And I think private equity, the modeling that private equity does that I learned a lot about, which I knew nothing about until I got involved with them, is incredible. And how they operate through the financial system and utilize leverage, I think, is fascinating. And I think it's a great world to be in. It's not the terrible world that a lot of people make it out to be in the media.
Yeah. So what I'm gathering right now from you, basically, in a nutshell, is, the most important aspect in life is your relationship building ability, the way you can communicate with people, read people, anyone listening to this. It's almost like you want to major in psychology if you're in college right now, in order to get a good feel as to how people are. Now, you mentioned something about you got into the hotel business. Why?
Well, it's interesting because, we just went through a portion of my career up until then, right? But the first thing that you said when we got on the phone was that I owned the Mondrian Hotel in South Beach,
right? Which
is really the smallest part of my career. The one thing I did learn also about going into the hotel business was how great, I said, I was always kind of, do I really want to be in the insurance business or not? And the truth of the matter is the insurance business is an absolutely incredible business. My business, Harbor Group, that I built as, I was the first employee, and I sold it multiple times. The business thrived. It was an absolutely incredible business. Even in COVID, I'm still technically the CEO of that company. The company I sold it to wanted me to stay as CEO, even though I'm not active day to day in the business at all, just because of the relationships that I've got with a lot of the major banks that are its clients. And it's an incredible business. And I really kind of learned that after I exited it, that how great it was, because the hotel business and the hospitality world, forget COVID. I mean, I figured this out the first week after I bought that hotel in December of 2019. And I figured out a week later that, oh my God, I didn't know how good I had it for so long in the insurance business. Because the hotel business is a totally different game.
Right.
You're catering to, I had an unbelievable team of people within in my insurance business, and I'm talking about from the beginning, and I had brokerage businesses. I own multiple insurance businesses, not just one. But I had amazing people. I mean, truly, truly amazing people.
Well, let's touch on that for a second, because we happen to work in the same building, and I would come down quite often, and we'd just shoot the shit a bit and, break up the day. And one of the things I noticed was, I'd say maybe 98% of the workers were female. We never really got into why would you hire a full group of women? Was that part of the key to your success? And why would you hire 98% of your staff as women?
In the beginning, it didn't really happen intentionally. And I don't think in the end it was ever intentional. I think that in New York, when the business is still in New York, and the business was always in New York, but when I moved to Florida, we continued to grow. And I had bought the company back in 2009. I'm in the depths of the financial crisis. I moved to Florida in 2010. Someone that worked for me, and started out as a very junior person, and she was a very intelligent person, incredibly intelligent, great at what she did. I mean, she worked with me a lot when I lived in New York, and then she ultimately moved to Florida, and she was our COO. She ultimately became our COO. It just kind of slowly started happening where, I found that, and this is no offense to the men, and obviously we had men in that business too, but a large portion of it were women. And in Miami, it ended up where it was really like 98%. In the other offices, there were more men. But where you saw it, there were a lot of women. And the staff was pretty much, I would say it was an 80% women-based staff. Women are incredibly loyal. Okay, it comes back to that loyalty thing. They're incredible multitaskers. They're incredibly honest. I think they have a better bedside manner in some respects than men do. Our clientele were the leading banks in the world, and we did business all over the world. The company still does. Our clients are Goldman Sachs and JP Morgan and Bank of America and Deutsche Bank, all these big banks, and those were predominantly men. Okay, so our clients, even though they had plenty of women there too, but most of the senior level positions were men, and a lot of the men enjoyed dealing with women.
Right.
It was just the way it was.
Energy.
Yeah, their energy, and they were all very positive. So that kind of evolved. It wasn't really totally planned.
Right.
But ultimately, I think it really worked out to the favor of that business. And, we'd go to these conferences and we'd go visit our clients, and you've got these, investment banker guys, and you have these intelligent women, and they're smart, and it just worked. And again, it wasn't so premeditated. It just kind of evolved, but it was ultimately, I'll call it a strategy to give myself a little more credit than I'm entitled to, but it ultimately worked really well. But they were smart. And I will tell you, in a lot of respects, it was not, the world of, is it equal in the world? It was. I think it's much better today than it was, but I enjoyed having the diversity. I enjoyed giving a lot of these women the opportunity. The business still has an executive team that's filled of all women. They've all done incredibly well. When we sold the business, a lot of them participated in that sale. So for me, it was very gratifying to have that and give them, the opportunities. We always encouraged diversity as well. We were a very diverse business. It just worked out that way, but it was very successful.
Yeah, I definitely, I saw the energy. I felt the energy. It was pretty powerful. So you're, I would say maybe, one of the most successful people I know monetarily, right? Let's pivot that over to health. Like, I noticed a year or two ago, you started getting a lot more focused on, dieting and working out. And I remember a couple of years ago, we went to dinner and, you were really focused on, what you were eating. Are you maintaining a specific type of diet right now? Or tell us a little bit about your daily routines. What's your morning routine like? How are you keeping yourself mentally sharp right now through COVID-19? Like, what's a day in the life of Michael Liebowitz like today?
Well, I don't want to tell you what I ate yesterday because it was not a good day.
Yeah, we all we all fall off the wagon now.
It's interesting. Yeah, no, a few years ago, I definitely got more focused on that. There's no question about it. But I don't eat as well as it may seem.
It's hard.
Yeah, it's very hard. I try to, but in the morning, I get up pretty early, in the 6. Although lately, I've been sleeping really well. So I don't know if, the pandemic obviously throws this off. So if you would ask me that question 6 months ago, it would be different than it is today. I actually used to be, I had to work out in the morning or I didn't do it. Now I kind of, we'll do it in the afternoon where I didn't before.
But you have to get a workout in.
I try to. I mean, yeah, like I didn't work out yesterday, actually. And I said, maybe that's why I ate so poorly yesterday. But I didn't work out yesterday. But I don't go crazy. The one thing like I've kind of learned about is the balance. I think you've got to be balanced in every aspect of your life. Now, I don't live a lot of the things that, I'll say these things and it sounds great. But we're all a work in progress.
Yeah.
Right. I knew this guy.
I had a caramel frappuccino on the way here. I mean, yesterday I swore I was going to start a very strict diet, but it happens.
It's funny because it gets, I think diet, mental, and all of that is an evolutionary process. And I knew this guy that was this doctor, a famous guy. He wrote 4 books, and I'll never forget. And I said to him, his name is John Sarno. And I said to him, Dr. Sarno, when do you get to the point where you really
Healing back pain.
Yeah. And I said, when do you know? And he said, well, it only takes a lifetime. Right. Okay. So in reality, it's every day is another, thing, but I try and get up, as I mentioned, early. I try and actually read a little bit, try and kind of get my mental brain going. And then I'll do, I'll either work out in the afternoon or if I have calls. And, as you mentioned, I bought the Mondrian, and my partner in the Mondrian is an early guy. So he loves to do conference calls in the morning. And, we're renovating that hotel right now. And that's been going on since COVID began. So a lot of our calls are in the morning, the design team. So that kind of screws up my morning a little bit. When I had my businesses, I wouldn't get in till, I would always be available. I was a 24/7 guy. I would get 500 emails a day and I returned every single one of them. My life was much different then. But then I would basically get up in the morning and work out and get to the office at 10:30.
You're a fan of the cold plunge like me. I know that.
I love the cold plunge, which has really screwed me up because now there is no cold plunge because I would do it on Fisher Island. And I'm actually thinking about maybe I need to buy a house to put a cold plunge in because no one has it. Right. So, but I love the cold plunge. But
well, let's get into that for a second.
Yeah.
Like, the reason I kind of became addicted to the cold plunge was like, I kind of want to embrace that little bit of pain, and I feel like it cleanses my mind, body, and soul to start my day. Like I go in there, I get iced up, I do 7 dips underneath, and then when I come out, I feel rejuvenated, like I can attack anything. And when I don't work out and do the cold plunge, my day is completely different. Like I don't feel the same. And what's your like motivation to do the cold plunge?
I just love it. I think it does exactly what you just said. But I think that, again, like you just said with your mind, the mind is, it's like you talk about diet, you talk about the workout. The reality is the most important muscle that you can work out is your mind, right? If you can get your mind clear and straight, and that's a workout too, right? So like I've read, I read about, all these, as I said earlier in the interview, about studying people, right? So if you look at most of these successful people, they are working on their mind, right? I mean, Warren Buffett is not the most in shape guy, right? But his mind is probably really good. And that's probably even more important almost than the physical. And everybody's so focused on the physical. So I try and work my mind out in the sense of reading and thinking and doing all that. And again, it's a very evolutionary process. The last 3 or 4 years of my life have been much different. I sold, I still own an insurance business in New York, but I sold, most of my insurance businesses over the last 2 years. As I said, I used to get 500 emails a day. Now I get, 75, and I'm still doing a lot of things right now, but it's much different. So when you have a little bit, the idle mind is the devil's playground.
100%.
So you really have to kind of like keep yourself balanced and keep grounded and stay down to earth and not change. And that's, I think, the most important thing just in life is like a lot of people, they, become successful or they have one big hit and then they become this like different person. And I think that you really need to stay away from that. Don't believe the headlines and don't believe all of it. Stay really grounded. Keep your mind, very balanced. It's even like in investing. I get so many phone calls today. Do you want to invest in that? And I read something that said the most successful people say no the most. You got to like literally look at 100 deals and say no to literally 99. And it's hard to say no, right? People give you their appeal. They give you this, they give you that. But, you got to stay disciplined, and staying disciplined in your mind is probably the healthiest thing you can do.
Yeah, I heard a quote. The best deal I ever made was the one I didn't make.
Yeah, I've got a lot of those.
Yeah. Now that you do have more time, you're getting a lot of investments, inquiries, right? So you're more liquid than you probably ever imagined you'd be. How do you invest today, broken down in like buckets percentage-wise, ultra conservative, somewhat conservative, my own businesses, stocks? How is that now managed?
That's a great question, because somebody asked me last week, was it harder to make the money or manage it now? And I set up a family office a couple of years ago, actually in 2018, for that purpose. And I will tell you, it's very hard. When you're building your businesses and you're making money, you're running down the field, you're not looking up, and that's it. Here now, I now have a totally new respect for people that have to invest and manage their money, because it is very difficult. Again, getting back to the mental, it's mentally very difficult. I know how hard I worked to accumulate the assets, so I don't want to lose them, right? So it's kind of like a game of preservation. I want to basically stay where I am now. I don't want to lose it, but I also am still a young guy, and I want to do things that are fun and interesting and exciting. And, buying that hotel, was kind of maybe one part of that. I just publicly filed a SPAC. I can't really talk about the details of it because we just filed it. So I'm going to do that. I've got a bunch of... On
the SPAC, just so people understand what that is, if they're listening, it's a vehicle in which I was at one point in my career about, 10 years ago now, maybe one of the biggest SPAC money raisers on Wall Street, because we brought that product, Ladenburg Thalmann, really to Wall Street. So you raise money, you put it into a money market account. The person or the team has about 18 months to find a privately held company, and it kind of backdoors into a publicly traded vehicle and starts trading like an IPO once that is found. So I'm assuming you are going to be raising that money and then looking for a company to acquire. Is that
correct? That's exactly right.
So that's got to be a fun little mission now.
It is. And what's interesting was I actually filed the SPAC back in 2007. The last phase of the SPAC world, it was a much bigger SPAC actually.
That's when I was... Yeah.
Right, that's when Ladenburg was doing them
that
a lot.
saved my business because all the money I had was in SPACs, really a big portion of my business. And it was all in money markets. So everyone was losing all their money. I had a lot of money in SPACs, which was a safe haven because if the world ended, at least your money was in a bank account. And that's why I did it. And that ended up happening.
Yeah. So I had a run at that, and we actually ended up pulling that SPAC because the world really changed, I think, which is much different than today. In doing a SPAC, I think the SPAC world is much different today than it was back then. So, and we pulled, and that was again, that was another time of my life where I had a brokerage business that I had sold to a public company in 2007, and I was looking for more things to do, and that's when we filed that SPAC, and ultimately we pulled the SPAC. So it's very hard to manage the money. It's a lot of pressure. It's a lot more mental. I would say like building a business is kind of more physical, right? Mm-hmm. Because you're doing it every single day. You're trying to get the client. You're trying to keep the client happy. You're building your revenues. There's not as much to think about. Where here, there's a lot more to think about. So I'm a relatively conservative guy in the selling of businesses. I've timed the market. I pretty much hit every cycle where I bought at the bottom and sold at the top. I've been fortunate there. But on the investment side, it's not an easy thing to do, right? I mean, you've got this election coming up that's going to be, we don't know if it's going to be decided that night. I think that's
who wins.
Yeah, I mean, the biggest issue is going to be
who do you think wins?
I don't know the answer to that. I think it's a tough one. I think Trump definitely could win, but I also think that these mail-in ballots are an X factor. I think there's a lot of things that are going on, but to me, as an investor, it almost doesn't matter right now, because right now I've got to make sure that my portfolio is positioned for that night of possibly we don't know, right? Mm. So the issue is that
unless it's a blowout on either side, we're going into a contested election.
Yeah, and I think if you go into a contested election and you own public equities, like I own some public equities, not an insignificant amount, you've got to deal with it. And my thing is, as an investor, that's different today, right? I think different than I did. I was an equity investor through the last, crisis. I'll go through 08, 09, 10. And I invested differently than I do today. Then I was a fearless investor and I would buy. And now, again, I'm at a different stage of my life. I'm more about preservation. I don't have those businesses again that are throwing the cash flow off like they used to.
So I just want to bump in there because as a financial advisor, I find it very interesting that the most risk-adverse clients, the ones that I had to preserve capital for right now, are doing the worst. But those that, follow the William O'Neill, I'm a disciple of William O'Neill, earnings, momentum, forward guidance, things of that nature, cut your losses short, what have you. Those Amazons of the world, the Apples of the world, the DocuSigns, the Twilios, any of the clients that have been on that end of the spectrum have been crushing it. But what do you do in a world where the 10-year treasury is 0.5%? And the risk is to the upside, rates going up over time. So it's very difficult, I would say, for someone who's looking for risk preservation of capital in the financial markets today. Like, where do you go?
Well, listen, what I've done is I've carved it out, right?
Yeah.
So I have a portion I'm in cash. I have a lot of cash, okay? Right. So when I mean that, I mean relative to my portfolio.
Right.
I'm saying a lot of my portfolio is still sitting in a zero money market in cash because I like to have dry powder. I don't know what deal is going to be looked at. I'm a big believer in liquidity. I always was. Even in 2007 and 2008, I was very liquid. I'm very liquid now. But I also believe, like I just sold my position in Apple a few weeks ago that I've owned for a long time. And I actually love Apple right now. I mean, I looked at it this morning at 112 and I actually think it's going to go back to 125, 130. So I don't know how great of a sale that was, but it was such a big hit. I said, you know what? I've got to take that off the table. I've got, other things out there. And I think that the zero interest rate environment, ultimately, no matter who wins the election, we're all going to be forced to buy the market, right? So, 100%. And you or a much more of a momentum guy. And I think you're right. The guys like me, where I've made my money is I buy the QQQs, and I bought Apple, and I own Facebook, and I own a lot of those stocks too. And those have done unbelievably well. And my, lower risk stocks, I'll call them, or the stuff that hasn't moved, hasn't done as well. But I think ultimately I would have been much better off listening to you, okay, and going with Twillo and all of that. I would have made a fortune of money.
Yeah, we had a good run there. But I also, it's something where I think we're on the same page right now, that the risk reward in any investment, like, you just do not. I mean, we lived through 2000, right? We lived through 2008, so we know what could happen. What do I keep looking at? In 2000, I can buy a 10-year treasury for you at 5.5 and call it a day and say, let's watch this. Today, I can't do that. I can't just go buy you a 10-year treasury at 5.5.
Well, you could buy me the preferreds, right? I can get 5 in the preferreds.
Right, but those preferreds dropped to by 50%. Ford commercial paper dropped 20%. It's a 3-month commercial paper when the COVID first hit. So,
you could buy the bank. I mean, you could buy Wells Fargo and Bank America, those preferreds, but they went down too.
Right.
But they ultimately have an implicit government guarantee. So I was buying a lot of the preferreds in March.
Right.
I was buying the ETFs, I was buying the individual issues. The one difference that I learned today, and this is experience, is I was buying a lot of credit, right? So I was buying discounted, I was buying GM bonds, I was buying preferreds, I was buying things like that. And because ultimately, what I didn't understand in 2008 is that the credit market dictates the equity market, right? So I was buying discounted debt of companies that I thought were never going to go under. And it was incredible. Listen, in March, I was buying like crazy. I was buying munis that were down, that whole market. I have a great guy that I work with on munis. We were buying tons and tons of that. So in March, I was really loading the boat. But again, and I was buying the QQQs also. So I did expose myself to tech, but I bought much differently. Like normal, if this was 12 years ago and I still had the businesses going, I would have called you.
Qs.
Yeah, I would have called you. I would have bought, I did. I was buying the triple leverage weight.
Right.
I was crazy. I literally was buying triple leverage ETFs back then and really loading the boat, if you remember that. Today, what did I buy? I was buying the PFF, and I was buying the debt, and I was buying the other end of the credit market. I was buying, the preferred bank stocks, which is higher in the capital stack, right? I was understanding that. I was more like an intelligent guy that actually knew what he was doing this time. And even then, I don't think anybody knows what they're doing. But if I would have taken your approach and bought Twillo and all that stuff, I would have made an absolute fortune. But I didn't want to take that risk at this point in my life.
What's interesting is when you say that to me about the risk, but my risk on a stock like Twilio, if I buy and it goes against me by 10 to 15%, I am out of the stock, right? It's just the way I was trained to invest for clients. If it goes against you, get out. You can always buy it.
But wait a second. But you said to me the other day, we were talking about it, and I said to you, do I sell my stuff? Do I take the losses? And you were talking to me about the 200-day moving average,
right? And
all the technicals and all that. And that's a science unto itself that you understand,
right? That
I don't know anything about. But the only thing I'll say to you is like Boeing. You made a comment. You were like, Boeing, it could be nationalized. Well, Boeing on Friday announced that, and I'm a long holder of Boeing for a long time, that the 737 test flight's happening this week. The stock popped 10 points.
Yeah.
And if that test flight goes well, I can't imagine Boeing doesn't set this up where it goes perfect. Maybe you get another 20, 30 points out of it. Yeah. So you have your way of doing things, which works 100%. Me, I'm more of a neophyte, right?
You're more of a Buffett guy. You like to try to find the little value.
I like value. Right. And also I say to myself, Lonnie, I understand your moving average stuff and I know that works for you, but I look at it like, well, if Boeing all of a sudden starts selling the 737 again, okay, that stock's going to go back to 250 or whatever. So my approach is much more of a longer logical approach. Right. You have a much more technical approach, which again,
I'll buy Boeing back above the 200-day.
You'll buy it higher.
Right.
I like to buy things when it's so ugly and disgusting and everybody wants to throw up.
Right.
Is when I buy. I don't buy on the way up. But the truth is, in fairness to you, that strategy probably works more than mine.
Right. All right, so let me pivot to something else. 10 years ago, you could have put $200 into Bitcoin, and today that's worth $10,700. 10 years from now, is Bitcoin a zero, around the same place, or over 100,000?
Okay, so my 20-year-old son, who I drove to the airport, Maddie, the other day, asked me about Bitcoin because we were talking stocks. I really want to get him to kind of start learning the markets and all that. And he's been doing a lot of that. And he asked me about Bitcoin. And my answer was, Maddie, I don't know a single thing. I got to read about it. That's what I said.
I mean,
I don't know anything. I don't even know what Bitcoin is, other than it looks like a gold big. I think of it. You remember those chocolates that you would get?
Yeah.
Like, those holiday chocolates. That's what I think of Bitcoin. I don't know anything about Bitcoin.
Right.
But again, in fairness, not really in fairness to myself, in truth to myself, I'm behind the eight ball in that stuff. Like, even like buying options and puts, and I'm not on there. I need to like sit down and read all that stuff. I'm a very basic investor. Right? I'm sophisticated, but I'm very basic. I like to buy out of favor, things that are ugly, that look like shit. I buy them and I'll hold them and hold them and hold them. And I look at it, I look like you said, like a Buffett. I look at it like, all right, I'm going to buy a business. And I want to own like Intel. I own Intel, right? Intel's been horrible. Okay. But in my mind, it's got tons of cash.
Yeah, but AMD is crushing them.
I know they are, but at the end of the day, Intel has 10 times the earnings, pays a dividend, and at some point, I think Intel's going to get it right, and that stock's going to double. Now, that hasn't worked. If I would have went and bought AMD like you told me to, I'd have doubled my money already. I'd be out and happy.
Right.
Instead, I'm sitting here suffering, owning Intel, which is a value stock.
Right, because the market looks forward, right? So if the market thinks that you just said 10 beats amount of earnings, whatever, 2 years out, the market's saying, who's going to grow more? They could be losing money, but if they're growing their losses to like breaking even in 2 years, the street likes that story better than a Microsoft making more money than they've ever made in their life. So, but my story on Bitcoin is interesting because, I had the guys telling me at 200. I looked at them like they were crackheads, right? Like, the hell's Bitcoin? But then it went to 20,000. And then I had calls. Should I buy Bitcoin? But I said, I wouldn't buy Bitcoin, but this reminds me a lot like Amazon, the tech bubble back in 2000. I said, if it drops 50%, you can look at it again. Will it drop 90%? And I bought it like 3,500. And then I went down the rabbit hole. And you can go on YouTube, you can go on podcasts, and then once it clicks, you'll get it. And there's a guy, MicroStrategy, the CEO, had $500 million in cash in his reserves. MSTR, publicly traded company. He took $450 million and he put it into Bitcoin because he said everything else is going to melt away due to the inflation that's going to come eventually. So I'll send you some stuff on that. Just a good podcast.
Yeah, no, but you're a momentum.
Well, on that one I wasn't.
Guy.
On Bitcoin, I went the other way.
Right.
I waited till it dropped and it was just decimated. Everyone wrote it off, and I bought it at 3,500. The problem with what you're talking about is that as a financial advisor, most clients are seeing the S&P, the NASDAQ go to all-time highs, and their Intel or their Boeing, which you might be right in 10 years as an investment or 5 years. It's very difficult to watch the financial market have the Zooms, DocuSigns, 10Xs within a very short period of time, 2 or 3 years, and you're sitting in a loser.
Yeah.
Yeah. So
I have plenty of those.
Right. That's not my game, but hopefully you'll be right at some point. Right. Buffett's whole thing is at some point I'll be right in his philosophy.
Yeah. Well, listen, like they say, if you have the time and the money, you're going to be right.
Right.
Yeah.
So with that said, let's wrap this up. I could talk to you forever. But if there was, you said you've been reading a lot. What is the best book you've ever read?
It's interesting. It's not a financial book. The best book I ever read was a book called The Four Agreements, which just talks about being precise with your words, with your intentions. And it's literally a 100-page book. And I think that's right. Again, I think that the principles that you learn in life, you apply into business, into those relationships. When they say it's not, somebody said to me, this guy said to me, I was, I think, 23 or 24 years old. I met this guy, and through somebody else, he was a very successful lawyer. He said to me, Michael, if you have your health, the rest is easy. And it's really true. And even though I looked at that, it was like that at that time, I remember I didn't even understand that. I wanted some real advice, like, how do I do this? How do I become successful? And he said that, and it's true. Listen, you got to be lucky, you got to work and the other thing is the biggest differentiator between people is not intelligence, it's work ethic. The hardest worker is the one that becomes the most successful. I don't think I'm the most intelligent guy in the world, but I will work harder than anybody else can work. And I always was like that. I'm a little less like that today, but at the end of the day, I think that, we read all these books and people read like financial books and investing books, but at the end of the day, you really need to apply, because life is not all investing, right? I mean, you have your business, then you have your investments, and you have that. But if you apply those basic principles to life, you should do pretty well. But you got to work your ass off.
And I think that correlates with why you're going after the hotels, you're doing the SPAC. There'll be so many other things, because I've seen you in the zone, and that zone is what makes you the happiest.
Yeah, well, that's what I learned. That's fascinating that you said that. That's what I learned over the last few years, right? So I went from high energy, running these businesses, and time I had 4 businesses. I was a CEO of 4 different companies.
It's not so much the money.
No, not at all. I was never focused on the money, to be honest with you. For me, it was always about the FU money. It was always about independence. I was never in it for the material aspect of it. I'm still not.
You do like cars.
Yeah, I like cars.
Me too.
But I was right. I was never in it for that aspect. So I think where you're right is that the last few years I've been much less busy, and I got out of my comfort zone, and I kind of had to I had all this time on my hands now, and I'm like, oh my God, what the hell do I do now? And it was scary, to be honest with you. It was really scary. I got divorced. I was like, I sold my businesses. It was like I had all, and now, in the last, 5 or 6 months, even though we had COVID, I'm much busier now. I've got, a good amount going on. Still not the day that I used to have, but yeah, I'm back in my comfort zone in the sense of, being in business daily, managing the money, now
You're
filing the SPAC.
Yeah, you need deals. That's it.
You have to do it. Yeah, we all do.
Yeah. And one more question. Best movie you saw in the movie theater? You walked out, you're like, whoa, that was great.
That's a really tough one. I have to tell you, I don't know if I could answer that question. I can tell you, because I watched an episode last night of Billions.
You're a big billionaire.
Okay, and let me just tell you what I thought of when I watched that show. And I thought about myself, and I said, when I watch a series like that, it's like a learning experience. I'm not watching it for the sheer enjoyment.
Right.
I'm literally watching that series, and I'm learning from it.
Right.
I'm learning what not to do, right? Because I see things that they're doing that are wrong, and I'm like, what are they, crazy? Are they out of their mind? But there's also an element of that series that just brings me back to, the beginning. And that guy, the character, grew up similarly to me, went to a very similar school, a lot of those experiences. But what movie? It's funny.
I'm going Braveheart. When I walked out, because when the woman got her throat
I didn't.
cut off.
I didn't even see that movie.
Oh, what a great movie!
You know what? I can't.
You could stick with Billions. I mean, I'm gonna actually probably. Yeah. Is there a new series on right now?
I don't even know. I don't know what they're doing. I don't know if they'll ever make it better, but I think the first, and it's funny, I only watched that show. I was not watching a lot of TV. A mutual friend of ours said to me a few years ago, you need to do something mindless and watch something mindless and go watch a show. And I start watching this, and it was the furthest thing from mindless. It actually, in the beginning, got me more stressed out because it actually reminded me of my life. And, but it's just a fascinating, window into what goes on. Obviously, my life is not that crazy like theirs is, but I just think that when you watch these movies and when you watch these TV shows, a particular person watches them with more going on than just the entertainment value. You're like learning and you're hearing.
100%.
Everything. That's what it does for you.
I think everything that I do with intention, whether it's a movie, a book, it's with the intent of learning something from it.
Yeah.
Otherwise, it's kind of a waste of my time.
Yeah, and that's the other, to really, we're ending, and I think that's the most important thing is that somebody once said to me, you'll never run out of money, but you will run out of time.
Yeah.
And the truth of the matter is that that's the most fascinating thing, because it shows that time is the most important thing. And the people you give your time to, you're giving them the most valuable thing when you're giving them your time. And I don't know if people really truly understand that.
Yeah, and I appreciate you coming on. I approached you because I have noticed on Facebook you've been a little more out there. As historical, you've been more of a private guy. Not so much out there, but you've pivoted and now you're coming out. And I saw your Facebook. Is that where people can find you if they want to follow up and see what's going on in your world?
Yeah, it's funny. I'm not a social media person. I never was. I only ended up on there because someone had said to me, oh, you're buying a hotel and you should be a little more visible, which I don't really like it, to be honest. Right. I actually like to be very private and quiet, but I think you also have to adapt to the world that we live in.
Right.
And it's just the world we live in. And I think for some people, social media is amazing. My parents, it's great. They get to see everything that's going on. It keeps them busy. So I think for a lot of people, social media has a lot of benefits.
Right. All right, we're going to leave it off. Thanks. I thought this was great, and there's going to be a ton of golden nuggets that, someone who's listening can learn from, myself included. I look forward to watching the next phase. Great time. Thank you. And thank you for listening to the OG Money Podcast.
Thank you for listening to the OG Money Podcast. Click the subscribe button below to be notified when new episodes become available.
Securities offered through Securities America Inc., member FINRA SIPC. Advisory services offered through Securities America Advisors Inc., an SEC-registered investment advisor. This site is published for residents of the United States and is for informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any security or product that may be referenced herein. Persons mentioned on this website may only offer services and transact business and/or respond to inquiries in states or jurisdictions in which they have been properly registered or are exempt from registration. Not all products and services referenced on this site are available in every state, jurisdiction, or from every person listed. Third-party comments may not be representative of all customer experiences.